One of the most powerful trading tools you need to become successful as a trader is the trend line. In this video, I'll be guiding you step by step how to use the trend line to identify the weekly market direction. So let's get started. This is the weekly chart. So I'll be using my trend line to connect three levels. To identify your market trend with the trend line, you need to use the trend line to connect three swing levels, which is this low and this higher low and this higher low. So long the trend line connected these three swing levels, this shows that the current trend of this particular currency pair, which is the GBPUSD, is currently in uptrend. So for you to trade this pair now, before going to a lower time frame, once you identify the trend of the market with your trend line on the weekly chart, before going to the daily chart with the trend line, or you can also go to your 4-hour chart to use your trend line to also identify the trend of the market. You can see that on the 4-hour chart, you can see that the current trend of the market on the 4-hour chart is currently in what? Downtrend. So for you to buy this currency pair now, you have to wait for price to break above this counter trend line, then a retest of it, look out for buying opportunity, because the higher time frame, which is the weekly chart, is still telling us that the market trend of this currency pair is still in what? Uptrend. So let's go back to the weekly chart. Let me show you how to make use of the counter trend line. So on the weekly chart, how do you identify a counter trend line? You can see that we draw this trend here now, this trend line here now. This is a counter trend line because it connected two swing levels, which is a very weak trend line. This shows that if price break this level, it shows that price has not really turned this market to downtrend. This is a weak trend line because it connected just two levels. This shows that it's a weak trend line. It shows that the trend of the market is still in the uptrend. Just is a counter trend line just to use to identify a reversal of price. But to get a major trend line, which the major trend line must connect three swing levels. So to get your major trend line, you can see, for example, here, when price changes the trend of the market to uptrend, you can see that we have this three swing level here now. You can see that we have this level here. So long we have this 1, 2, 3 swing levels and price close above it, this shows that price has turned towards uptrend. Because if the trend line connect to three swing levels, this shows that if price break above it, it shows that it's for uptrend. Once price close below a three swing trend line, shows that it's for downtrend. You can see it from this example now. See that price are close above this trend line, which make this GBPUSD be in uptrend since after price close above the three swing trend line. So let's go to our daily chart, how to make use of this trend line. After price has closed above it on the weekly chart, the next thing you have to do is this. You have to go to your daily chart time frame, or you can also go to your 4-hour chart time frame to identify the trend of the market. You can see that price break through this level here now. So long price breaks through it, this shows that the trend of the market on the higher time frame is currently in uptrend. So long we have this uptrend trend, the next thing you have to do now is use a counter trend line to connect two swing levels. You can see that we draw our counter trend line here to connect our two swing levels. For this is a counter trend line. So once price close above the counter trend line, you look out for your buying opportunity for price to continue to push higher, because the major trend of the market is on the higher time frame is telling that the current trend of the market is still uptrend. Then your job on the 4-hour chart, or the daily chart is to use a counter trend line to identify a break before looking for a buying opportunity. This particular trading strategy is for swing traders, because this will enable you to hold your trade for a period of 2 to 3 days. Okay, let's go back to our weekly chart. On the weekly chart, so after price break these three swing levels, if we go to our daily chart, you see that, let's mark that level and go to our daily chart. So after price break the swing levels, if we go to our daily chart, you will see that the trend of the market on the daily chart is clearly was also a bullish trend. So to draw your counter trend on the daily chart, you have to draw your counter trend with this level. So a close of price above this counter trend, this shows that price will be, you can look for a buying opportunity after price close above this counter trend. You can see that I draw the counter trend here, which is this level. I connected two swing levels. Is here, this swing high, and also this swing low. After price break above it, this shows that the trend of the market is currently the trend is for uptrend. Then after the close of this candlestick above this level, you can look for your buying opportunity for the pair. So once you identify the trend of the market from the weekly chart with your trend line, the next thing you come to do on your daily chart, look out for a counter trend line to identify your area of possible entry after price break above the counter trend line. If you find this weekly chart strategy helpful, like this video and subscribe to our channel. Thank you for watching.